Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome you on this Monday. Hopefully you had a good Father's Day weekend and we're right back at it. So welcome to all. We got Willis, Dom, Amanda, Maximus, Art, JB, a different JB, and also Truth Will Always Prevail and many others. We've got also Connie Hill in the chat as well. So we welcome her. I just want to give us a quick reminder. I want to hop into something just real quick. If you go to, for example, this page, okay, want to show you just real quick the schedule, okay? Right at the very tippy top, you're going to see that we did post in kind of a picture form a schedule update, and you'll see it right there. And let me kind of just send this link out to you, and you can see it right there. Quick reminder, since we have Connie with us, she'll be teaching coming up in just a little bit, trading ETFs. It's always an interesting topic, especially when you have a little bit more volatility in the marketplace. You're buying a group of stocks or a grouping of something or trying to track something. So ETFs, very interesting. We cover those Monday afternoon and also Friday morning with Kevin and I. So make sure you actually take a look at that. Now remember, those sessions are live only, okay? So that's why I'm pointing that out. Now, also a quick reminder that the information provided here is for general informational purposes only, should not be considered an individualized recommendation or endorsement of any particular or personalized investment advice. Remember that options carry a high level of risk and are not suitable for all investors. And also remember, when we talk about short options, those can be assigned at any time. We're talking about American style options, regardless of the in-the-money amount. So it's a standing obligation to sell or buy. And also remember that investing involves risk, including loss of principal. Now, also, quick reminder, if you go to schwab.com/events, 3 upcoming events. We're going to be in New York doing what we call a market drive. It's a one-day event right at the New York marquee. You can go to schwab.com/events, check out more information on that, and also seek some of the, you can register for it there by going to schwab.com/events. 2-day event at the, in New York City, same hotel. And then we're going to be in the Chicago region, right at the Renaissance Schaumburg Convention Center. So that would be a 2-day event there. So just want to give you a quick heads up on that. Now, quick reminder that today we'll talk about kind of some of the indexes in the sector, sure, to begin with. Then what we want to do is I want to talk about momentum. And I honestly, I'm going to make a comment. And I think it took me probably 10 years to probably really understand momentum. And momentum trading is very interesting because if you can get that momentum, okay, some of that trend could be very violent to the upside, potentially in a good way, if you could gain, and then also if it were to fall. And I want to talk about momentum here today, okay? There's a number of also examples of momentum with price patterns we will bring up as well. So if you said, well, how is this an indicator? Well, price is the ultimate indicator. That's why the price graph is so big, okay? Now, as a teacher, I don't want to teach you just about like oscillators. I want to teach you actually how to read the price graph, okay? Because a lot of the indicators are a reflection of what's happening on the price graph. So, of course, we're going to spend some time talking about the price graph and how to read that. Now, also, as we get started here today, quick reminder about if you went to this page, okay, right, okay, there, you could actually also see where you can subscribe and see all of our content as well. Now, I do want to kind of give also one more thing here. So today, for the last 5 hours, I've been tied up on doing another assignment, 5 hours straight. So I was not able to be on my computer at the same time because I was using my computer. So 100% of this class was really done on my iPad. On the left-hand side is the Thinkorswim mobile platform. On the right-hand side was my notes. And I just want to kind of point this out with phones or tablets, especially tablets, very powerful as far as what you can do with something no thicker than a sheet of paper, okay? So everything that you see here today, 100%, and it didn't take much longer than a real computer. It came from just using the Thinkorswim mobile app and just writing it down on a sheet of paper. Now, Kevin pointed out, hey, you covered up what you, some of the notes. That's true. I did, but I want to share it with you now. All right, so here we go. So first off, I want to kind of pull up just real quick. Probably the first chart that we are going to point out is the semiconductors. If you've been watching the market here today, it would be about impossible not to look to see the semiconductors. And it wasn't just in terms of the industry group in general, it was the individual stocks. Now, I'm rolling out the red carpet to you. What semiconductor stocks did you look at this morning, or did you see that poked you in the eye? I mean, they could have literally done that. Now, we'll come back to that, but that's probably the chart of the day so far. Now, if we take a look at the NASDAQ, and obviously if we're talking about the NASDAQ, the semiconductors, you probably say something about the NASDAQ. And if you take a look at what we see right now in the NASDAQ, the market is really putting up quite a fight at this resistance area. Now, this is kind of why we said sometimes the market tends to be geared to go higher over time. And there's reasons for that. And I've mentioned that. Okay. And if you take a look at kind of what we see is we drop down on Friday with the news with Israel and Iran, and the market kind of like bought it. Okay. And if you kind of take a look at what we see now is, who's to say it can't get past the resistance level? So if you look at this kind of price pattern that we actually see right here, it's one of the most bullish patterns you could see on a chart that is not as common. Okay. I call them V patterns. And if you look at these V patterns, these are the ones that could be potentially nasty in terms of breaking out to the upside. Now, the idea behind a V pattern is when the market drops, they always kind of say that when the market drops, it takes the elevator shaft down, meaning it falls quickly. And then when it goes back up, it takes the stairs back up. But with the V pattern, that's actually not true. The upward movement it goes up as quick as when it went down. Significance? Somebody was actually buying into that sell-off. And sometimes that actually news, the fear that caused that news might not really be more material over time as they can actually get more information on it. And we know as people, sometimes people make emotional choices, don't we? We all do. Okay? Now, if you take a look at this, I think that what we have to kind of at least throw out here is, do we actually have a case of the NASDAQ actually going higher? Does anyone think the NASDAQ could go higher? Now, remember, if the semiconductors are leading, that means that typically that there's risk-taking behavior in the current marketplace. When we actually look at the SPX, again, which is top-heavy, the technology again, if you look at the SPX, we'd probably actually say that the odds of the SPX breaking out of resistance, that's probably increasing as well. And if you kind of take a look at what we have there, we've had, and I'm looking at the weekly chart, we had 1 week where we were down, but held the moving average, fired right back to the upside, 1 week down, last week, and then so far. This is the candles, the key word is so far. If you could actually start to close above or trade above last week's high, considering some of the news we had on Friday, be pretty interesting. If it does that, could it actually go up to 61.12? Volatility, just briefly. When you actually look at the volatility, we talked about this on Friday. We did an example trade on this, somewhat of a directional trade on it. Volatility actually sitting here at 19. Moral of the story, though, kind of fading down a little bit. Now, remember, you got to remember, VIX is mean reverting. So when it goes up, it comes down. When it actually goes down, it comes up, hence mean reverting, okay? So far, people put on protection, not really seeing a follow through of that here yet. Now, I will kind of point out, I want to kind of talk about Dow stocks now, okay? And what I want to do is I want to bring up a couple Dow stocks. And if I were to ask you which Dow stocks, we spent some time on this last week, which Dow stocks have you been watching over the last couple of days? Now, I could close my blinds so no one could see what you wrote. I could, okay? I'm not going to tell anyone. Now, what I'm going to do is I'm going to pull up just real quick, go to public, go to Dow Jones Industrial Average. And a lot of times people think they got to come up with a secret hot sauce of actually how to find stocks. And then they might wake up one day and say, wait, couldn't I just go look at the Dow 30 stocks? Could that maybe be a starting point? Maybe let's actually focus on that for just a moment. Now, what I want to do is if we kind of looked at just, let's say, the percentage gain, okay? The percentage gain, if I were to rank by that column right there, the percentage change, you got Goldman Sachs, you got AXP, you got NVIDIA, okay? And it was kind of laughable when people talk about their earnings. It's kind of funny when you look back on it. That they thought that 2-day drop was so bad that it never broke support. They were wrong. And if you actually take a look at, let's say, Nike firing back, Cisco firing back, Triple M, and then IBM, which we've kind of been talking about that, right? It's not your father's IBM right now. And if you actually look at Meow, Kitty Cat, and Amazon. Now, I'm just looking at the top 10 or so. I don't know how many. Let's say 10. Now, if you take a look at this and we said, okay, what do we have on like Goldman Sachs? Well, we wouldn't have to have a PhD in technical analyses to really see, wow, that relative strength in Goldman Sachs has been quite strong, okay? We have a tall hold, call hold. We have a 20-day high and a 55-day high. It's been something in the last 7 days that's actually been going up. A lot of people, some might say it's too late. But remember, that number can be a little higher. We mentioned this last week based upon a question. That number might be a little higher if it's a fresh breakout. And what you're going to see is it's flag, and then that breakout is today. Now, let's go take a look at this for just a moment, and let's see if we can't take to it maybe a trade idea. Okay. Now, last week we actually kind of saw a little push. We did not meet the breakout criteria. Okay. So when we say breakout criteria, we talk about the open and close above the resistance, meaning the rectangle or the square of the candle, the body. Okay. And we want the closing price above the open. That's not a breakout, okay? This right here, okay? If you got to zoom in and look with a magnifying glass, it's probably not a breakout, okay? Some investors might have taken that or triggered in, okay? Understandable. Went down the very next day. Not horribly. Could have been under pressure, though, or probably was. And then today, what you're now going to see is another little push. Now, on the many examples we talk about here today, you're going to see momentum and channel trades. Now, on the bottom of this, what you're now noticing is kind of some little green little dots. Green dots, green dots, and green dots. And this is really showing technical evidence, okay, of higher lows on the chart. If those dots are higher than the previous one, higher lows are being made on the chart, okay? We don't need MACD, stochastic, CCI, RSI. You don't need to do that. You can just look at the chart, and if those whole dots are getting higher, momentum is building, okay? Now, here's the thing I want to debunk. You don't need more tools if the price graph is actually showing you that, or you don't need duplication of oscillators if the price graph is really showing you that. I think sometimes we look at too much stuff, and then we don't know what to do with the information. We get information overload, and the chart already told you that one thing to begin with. Okay. Now, what I want to do in this example, okay, I want to come in and I want to take an example trade of GS. Okay. Now, I'm going to be in, I want to go to the margin account for just a second. I want to go to just real quick the GS. Now, we do actually have a current position on that. And I'll check and see, do we have it in the IRA? And we do. We're going to show the example of adding to that position, okay? And what I'm going to do is on that is in the margin account, we're going to go in. Now, the example strikes we have, we're in the July expiration, and I'm going to go in this. Now, we got to be careful of this because if we came in and said, oh, we're going to buy this one, well, that's what we're short. You'll knock off the trade that you're currently in. What we're going to do is we're going to do the 630, the at the money strike, buy that, and then sell the strike above us. Now, in this case, what you're now going to see is if we did the 630, 635, debit 263, hence the max loss, it's now 260. It's going to give us a max profit of 240. Now, the goal of this trade, okay, the goal of this trade is to get it to go to the top of the channel. You might say, well, James, I am trying to get it to get a certain percent. That's fine. But in this example, we're going to say, look, if you can go to 656 or so, sell the position. It doesn't matter if it's at 50%, 55, 60, whatever it's at, okay? Trying to sell it into where we think that price could go to. If I actually brought this back up and said, how do we put that on? Single order, first trigger is SEQ, right click on that line, create opposite order. By the way, you could do a custom order on this as well, and go limit market dated GTC. Okay, if you said, well, if I'm going to do an order like this quite a bit, could I just kind of save a template? Yeah, sure. Click on it right there. Okay. And we could just call it vertical with target, or vertical with target and conditional exit, or downside exit. I'm going to put in this price. Look, if we go to 656, sell. Okay. If we go to that price or higher, where we think that resistance is, sell. Okay. 656. So if the stock goes to 656, exit the vertical position. Okay, so trade number one, long call vertical, adding to the position last week, and going to try to see if we can get a little rally. Now, a lot of times when people look at this and say, well, James, this was a failed breakout. You know, if you go back and test, and you actually like back test this, a lot of times the first time it breaks out, yeah, it might fall down. It might. Have you ever gone back and back tested the second entry? Have you ever done that? I have. Okay. It's very interesting. Sometimes the second entry could potentially. Okay. What happened in the history doesn't mean it's in the future. But sometimes that second entry could be more interesting than the first. Okay. I'm going to roll the carpet out for you to go back and do your own homework, but I've done the homework. And I'm just going to kind of leave it to a practice demonstration trade of taking that second time. We're going to see what happens. Question mark. Now, if we take a look at this, I'm going to go back in and say, put that order back in, confirm and send. There's your order. Now, remember, there's the target price or the conditional exit. Got a commission. Now, if we were to, let's say, look at, Goldman Sachs, what other stock in the Dow might be correlated to Goldman Sachs? Does anybody know the answer to that question? Now, if we said correlated to, it's probably going to be in the same sector. I just want to see if you're paying attention to some of those Dow components. Now, if I pulled this up and said, okay, we're going to send this, one of the stocks in there that's kind of falling, and I'll show this to you, okay? We're going to go to JP Morgan. Now, JP Morgan, okay, got it to the right side of that ascending triangle. Now, when we talk about momentum, okay, sometimes we can see the price fall down below the support for a shorter term basis, only to see the stock snap back to the upside. Now, is that a sign of momentum? Yeah, okay, it sure is. If people are buying below support, who buys below support? It goes against everything that we talk about in technical analysis. But we know that some traders that have a lot of experience or institutional investors, they're not so concerned with what's going to happen in the next 1, 2, 3 days. They're maybe buying for days, plural, weeks, plural, quarters, plural, years. And they're using that short-term price breakdown to try to establish a position. And it's probably a heck of a lot more than 100 shares of stock. So they don't mind that technical analysis support line. They're saying, hey, thank you for knocking the price down. We're going to try to enter that position and push it back to the upside because their holding period might be a lot longer than some traders. Now, if I brought up, let's say, JP Morgan, and if I said, let's go to studies real quick, studies, let's go to compare with, okay? And what I'm going to do on this chart is we're going to add a custom symbol, Goldman Sachs, okay? Now, if you look at this, the purple line, or fuchsia, is Goldman Sachs in a line chart form. The candlestick chart, JP Morgan. So in other words, what you're going to kind of notice is they don't go necessarily up as the same amount of percent or dollar amount, but you're going to see the line/candle are overlapping on top of each other. Now, someone might say, well, this is risky because if you did a Goldman Sachs trade, it's like you're doing a JP Morgan trade and vice versa. But let's kind of take this from a different standpoint. Let's say the investor said, James, I am bullish to actually Goldman Sachs and JP Morgan, but I really want to maybe just do like a different type of strategy with JP Morgan. And let's say the investor says, I want to maybe sell the put on this. What we're going to do in this case, or try to, go back to trade number 2, JP Morgan. And what we're going to do is we're going to sell a wider vertical. So if we were to, let's say, sell a 265 put and then buy a 250, well, what that's going to do is it's going to really make your credit bigger, lower break even, but then it's also going to give you like a built-in maximum loss given the vertical. Now that long put, that's not trying to make money. That's trying to define the risk. It's also trying to cap or limit how much money needs to be set aside to enter the position. Now, so don't think of this as a vertical per se. Think of this as, hey, this is really a trade where the credit is bigger, has a downside cap loss, okay? And what you're now going to see is, here's the numbers. So if this stock were to go to 0 from now until expiration, you're now going to see that given the vertical, it's going to be at $1,148. Now, that would be a pretty big loss on this account size. Noted, okay? Now, what I'm going to do is I'm going to do or try to do one single account, multiple accounts. We're going to do one in the margin and we're going to do 2 in the IRA. Now, we're coming very close to having no money left in the IRA, so I'm going to go ahead and see if that can fill. These numbers are now adjusted for the 3 contracts, 1 over the margin, 2 over the IRA, okay? Now, I didn't get rejected, so that IRA might have a little money left to trade. Now, I want to go back to something for just real quick if I can. Let me reload that. And what I want to do is I want to go also back just a couple other stocks that we're seeing. Microsoft continues to be a horse to the upside, showing green moving average lines, not showing a whole lot of signs of retreating. Now, I said today's topic is really about momentum. And I kind of thought about over the weekend, Father's Day, what are some things that if you could go back and talk to yourself, what do you wish you would say, like if we could do investing back to the future, and you were Marty, you were Doc, and you could go back and say, hey, when the time fast forwards to the future, what do you wish you would have remembered or known? Well, talking to self back in 1996, almost 30 years ago, I would really say to myself, look, looking for the price above the 10-day moving average, paramount, okay? That is the most visual sign of a stock that has a trend or could. But then the second point would be looking for stocks where they've exhibited a behavior of just 1, 2, or 3 down days only to be bought back up again. All right, now, if we actually look at Microsoft, 1 day down, and then it fires right back to the upside. 1 day down from the close, the open price, but it was up day over day, but it still did it. Okay, I'm just looking for red candles. Red candle, and then fires right back to the upside. Red candle fires back to the upside. Red candles, 2 of them, 1 of them. Now, the third thing that I wish that if we did investing back to the future, is a lot of times people have a very tough time with, well, it's too high. Well, and I'm going to kind of say, well, obviously, okay, if the stock has an uptrend, I mean, shouldn't it be hitting some highs? Is new highs a bad thing? Let me ask you this. If your marriage went to a brand new high, would you just call a top and say divorce, sign the papers? If a bank account or a brokerage account went to a new high, would you say, look, it's at a high, shut it down? I mean, if a house went to a brand new high, would you just say, look, sell the thing, we're going to go live in a tent? When you think about what like sometimes our thought process it's not as logical as you really think, okay? And it's not really bringing in other factors that could be helpful to understand why might it be going up and making brand new highs. It's like we're so fearful of brand new highs. Brand new highs are your friend because it's showing a confirmation of uptrend. Okay, is everyone still here? Okay, good. Okay. Now, I just celebrated a new high. Me and my wife, June 7th, we celebrated our 50th anniversary. Now, it's not our 50th, but we were planning ahead and setting a target, okay? And we just wanted to know what that 50th felt like. And so we're not scared of new highs. We are expecting those new highs, okay? And higher lows over time. Now, a little fun with you there. But now, since we're all there, and I just want to make sure everyone was still here, okay, as I blew people out of the water with the new high comments. So the biggest actually thing is, now, the one thing is, how do we know it's going to go up? Well, no one's going to keep going up, right? The whole idea is, could that trend continue? Now, we know that there's certain teams, if you watch certain teams in any sports, man, they just keep winning. And then if you look at some teams, we know that there's some teams, I won't even name them, that they just keep losing, okay? Now, the Colorado Rockies, I have to throw this out there. I think if you spotted them 5 runs, I think they'd probably still lose, okay? And the White Sox aren't that great, and Nebraska Cornhuskers, they haven't been great either. So, I just want to make sure I get them, tap into that nerve of pain. By the way, I have it too. My team's the Huskers. It's been very painful the last 10 years. But we know that there's certain teams that they just keep winning, okay? And they make new highs. Why? Well, some charts sometimes do that too. Now, the thing is, we're not trying to get all of it. The investor or the trader is just trying to get a chunk of that trend, just trying to ride the choo-choo train of momentum, okay? Now, what we're going to do in this is we're also going to go back to a 3-year weekly chart. And if you take a quick look at this, it has been, now, I think also one of the biggest things that an investor, if they didn't look at weekly charts, that would probably be a potential mistake, okay? And if you look at, let's say, what we have on the chart on Microsoft, okay, which stock is Microsoft might be very likely to do a flag, but what you're going to notice is there's upcoming earnings. Now, kind of another fallacy is here, I'm going to wait until earnings to see what's going to happen. Well, if I said that, I don't think I would know anything, okay? Investors speculate. Investors buy or sell based upon what they think the stock is going to do up until the earnings, not just on the earnings day. Now, in our example, what we're going to do is on Microsoft is we're going to kind of plan on that this stock might pull back some. And we're going to choose a strategy that is not maybe as sensitive to direction. What I'm referencing is delta. So when we look at, let's say, strikes, each strike has a delta, okay? As the stock goes up or down $1, theoretically, it's how much the option will move by if the stock goes up or down $1. We could also think about the probability of the stock being below the strike price at expiration or above the strike price. If we bought a call with a 55 delta, it's a 55% chance the stock will be 1 penny above the strike. If we bought the put, it's a 29% chance we could be below that strike, all odds summing to 100, 71% chance we could be above it. So what I'm going to do is I'm going to sell the 260. And what we're going to do in this case is we're going to sell and we're going to go vertical, okay? Now, this is another thing. Now, I'm not saying you have to do this, but when you have markets that are more volatile, sometimes what investors do is they change strategy, okay? Now, the example I like to give, if you're playing maybe a golf, and I don't play golf a lot, okay? But I live in Utah, and sometimes when I play golf, it's a hilly course, and I can't see beyond hills. If I can't see that fairway where I'm going to hit it, I don't pull out the driver. The driver in this case is a stock trade, something that's very sensitive to direction. Might pull out a 5-iron or 7-iron, hoping that I can hit it straight. That is not always the case, okay? Now, what I'm going to do in this case is we're going to sell the 250 and then buy the sell the 260, and then what we're going to do is buy the 250. Yeah, I see that. You know, I was actually looking at this and I was like, wow, that credit did not move when I did that, and I just saw that it was JP Morgan. No worries. That's why we double check. The chart. Now, what I want to do is I want to go back. What's happening is I'm moving back from one to the other. That's what happens. Now, if you look at this, if we sold something, our previous comments are still the same. But if, for example, if we chose where it's not the same, we're going to go to the July expiration on Microsoft. And what we're going to do is going to go a little bit lower. This is where we need to kind of make sure we got the stock correct. We're looking at the option table. This is where we need to kind of make sure we're picking the one that we want to practice in the paper money account. We're going to sell the 465 and then buy, let's say, the 555. Now, if I did that, okay, this is really good. Now, why are we kind of choosing something? And I'm going to kind of show some differences. This 465 has a delta of 26. 74% chance the stock could be above. Higher probabilities, lower credit. Now, if you did this, you're really trying to play probability. And some people, they like to kind of be more defensive and have a higher statistical chance of being right. However, some of you are saying, James, I like to kind of go for profitability and have a decent probability as well. Some of you might be saying, James, I was kind of thinking more like the 470, 460, $2 credit. And what you're now going to notice is $10 wide and the max loss. So if we look at the ROR there, 200 divided by 800, it's really 25%. For some investors, that's the minimum. Now we could say, well, I like 20%, okay? I think if you ask most investors, they might say 25% could be the floor given an option with 20 to 50 days to expiration. The other thing you got to remember here that kind of makes the ROI a little bit less is when you look at the implied volatility. Now, this is so funny. As option traders, we want volatility, but then we complain that the volatility in the market's too high. And then when the volatility is low, we complain that the volatility is too low and it's affecting the option premiums and it's affecting the break even. Just be happy, okay? Just be happy. It's never perfect, is it? Now, what you're going to take a look at is notice the commission, and what we're going to do is send that order. Now, when you take a look at this, and just this is a very good idea to do. When we look at, let's say, Microsoft, okay? Microsoft, read out loud, selling the 470, the 460, $2, okay? Now what we're going to do is we're going to go ahead and send that order. Now remember what that break even is. If we sold the 470 and got, let's say, $2 for it, really have a break even at 468. So we're kind of counting on this flagging, but really we need it flagged to bounce and rally into the earnings, okay? Now what I want to do is I want to fast fire in a couple stocks just real quick, okay? Now, by the way, if we were to look back and say, we're going to look at other momentum stocks, but let me show you just some stocks that are kind of showing some momentum, okay? Now, one of the stocks, and we're going to use this as our what? Well, let's just go back and take a quick peek, okay? Which examples did we do so far? Example number one, JP Morgan, okay? The other example that we also did is Goldman Sachs. Goldman Sachs was number one. JP Morgan was number two. We also did the third example, Microsoft right there. And the other fourth example I want to do in this case is I want to take a look at Caterpillar or Kitty Cat. Now, if you take a look at Caterpillar, it kind of has some upper lines, okay? Now, a lot of times people say, well, I'm not going to get in until we get to 378, then get to 388, then get to 408. No, those are potential targets, okay? We don't even know if the stock can get there. Now, the reason why I'm picking this one is if you go back and look in the last couple of days, we kind of see some of this momentum behavior. Now, a part of your homework assignment, and by the way, for those that are not here live or not watching on recording, okay, and or not paying attention, you're probably going to waste a lot of time thinking, well, I want some stocks to going up, but you're like missing the whole point of what I'm saying. Okay. So the investor is, number one, looking for the price above the 10-day moving average. Number one. Number two, we're looking for some behavior where the stock pulls back 1, okay, 2, or 3 days. Now, if what you need to be prepared for, if the stock pulls back for 1 day and then goes back to the upside, is that bad? No, that is the strongest sign of momentum. It didn't even have to go down that much until investors said, look, give me some shares. If the stock goes down for 1, 2 days, it's still, and bounces back to the upside, still strong. Think of it like a B grade. If it goes down for 3 days and then goes back to the upside, think of it as like a B minus. It's just not as strong as 1 day. Well, why don't people get in on the 1 day down and then fires right back up? Because they're scared to get in. We've been programmed, okay? We've been completely programmed to look for a deeper pullback. But a technician that is riding momentum, that's not what they're looking for. They're actually looking for those short duration pullbacks, 1, 2, 3 days, and a percentage pullback that's shallow, okay? So it's kind of funny. It's like the thing that we want is the exact same thing we're scared of, okay? Now notice we're talking about a little trader psychology here because that's a part of it. Now, if we take a look at this, we kind of see that it went down for 1 day and then what? Well, it fires right back. Notice what we see on the Cajole dots. 1, uno, or eins, zwei, drei, vier. And what do you kind of notice on the chart? Some higher lows. Now, if we take a look at this, let's say the investor said, you know, James, I want to do a stock trade. I'm a stock investor. And I want to kind of look for a move to the upside, okay? Now, remember, we're kind of saying if we did the investing back to the future, if you could take, and by the way, this is a question. What do you wish you would tell yourself when you got started? What's that major lesson for you? Okay. Now, I'm sharing a major lesson that I wish I would have told myself. Now, this is not a recommendation. You could do with this what you want. Okay. But the biggest thing is we're talking about the trend underlying, and we're talking about trying to find some stocks that might have potentially quick moves up or down. Now, what I'm going to do is on this chart is we're going to do a stock trade. I'm going to right click on the chart. And what I'm going to do on that is I'm going to right click on the chart, zoom in, okay? And when I do this, I'm going to right click on the chart with OCO bracket. Now, what you're now going to notice is we're going to look to set the target, and that target that we actually had on that chart with the lines is right about 378, okay? Now, SIA actually says buy Apple, Nvidia, Amazon when they IPO'd. I am not kidding, and I do not want to date myself, and this was only probably back in, what, 2003? I remember when Apple was $13 a share, and a guy told me, you should sell those shares because they're overvalued. I've looked for that guy. Can't find him. I'm joking. Okay. Now here's the thing. People talk about overvalued and they don't know the first thing about valuation. The only thing that most people talk about when they say that, just ask people, press them. Say, so what is the justified PE for that stock? What is the justified price to cash flow? Give me any valuation methods, whether it's free cash flow to equity, give me the dividend discount model, any model, give me any intrinsic value model, give me any model that you can think of and tell me what is the justified price given its current fundamentals. I'm telling you, there'd be a whole lot of nothing coming back for the most part. Be very careful who you listen to. And I've said this for weeks on end because there's people, man, they send people down a path and they don't really quite truly know what they're saying, okay? And now here's the deal. If I don't know, I'm just going to tell you I don't know. Okay. But if I've seen some examples of that over time, and we can say, hey, here's how it potentially works. Here's what we know. And here's some of the things we don't know. But we'll highlight that. Very important. Okay. Now, when we take a look at Caterpillar, we're going to set a target at that 378 number. I'm going to put that price right there. Okay. Now, when we talk about the capital wise, I'm going to go back to that margin account. We're going to kind of do, let's try the example of, let's say, $4,000 worth of stock-ish. If we did $4,000 worth of stock, it's going to be about 11 shares there. We'll also try to maybe do, I don't think I could, I'm not going to spend time on the IRA because we already have quite a few positions in there. It's really about 11 shares. So if I take this to, let's say, 11 shares, target there, data GTC, and then when we look at the stop, data GTC, okay? When we actually look at the stop, when we go back and say, where might the investor set the stop? Have we had a recent pullback? We sure have. Why? I mean, an investor might say, James, I'm going to use Friday's low as a place to set a stop underneath. Now, let's say the investor said, James, I'm going to take that Friday low and I'm going to show even a tighter stop. Wonder if they took 355 and set a stop less 1%. Okay. If we did less 1% from Friday's low, that stop is going to be at 351.45. Okay. Now, if we pull this up 351.45, there it is. Okay. That's 1% underneath Friday's low. Target. And that's at the first target. Are we saying it can't go to the second target? We're not saying that. Now, I've said this for weeks and weeks and weeks and weeks and weeks, okay? When the market actually pulled back, we kept saying, how on earth is the economy in general going into recession if industrials are smashing brand new highs? It was a great indicator, probably saying it wasn't the U.S. economy not going into recession. If you get that chart going up and financials actually going up and tech, probably not going into recession. The thing that we need to kind of say with asterisk with that, there could be pockets of the economy that are in a recession. True. And there could be pockets of the economy where it almost feels like a depression. Okay, sure. Now, what I want to do is I want to fast fire a couple stocks that maybe a technician might be watching. So our fourth trade example is Caterpillar. Can it break out inside this old channel? Okay. Now, a couple stocks, when we talk about these semiconductors, like what? AMD dropped down. Isn't it example of momentum? You better believe it. Down 2 days, fire right back to the upside. Down 2 days, gap down, close higher. The 3-candle formation on AMD is your down day, close higher, gap up. That is your classic variation from Cohold, close above the high to the low day. That's down day, close higher, gap. And close higher, you just need to be higher than where you open on that second day. The CHE, the close higher gap, that's a 3-candle pattern. And for many technicians, the entry is on the gap in the morning in the first 90 days. Now, just fast firing a couple other stocks. When you look at a stock like Marvel, keep an eye on that. Could that be a basing pattern reversal? When you look at a stock like, for example, ARM, could that actually break out above 146? TTWO, another stock that's been very violent up near resistance with large green candles. Keep an eye. Palantir, the paper money account is in, and it's actually hit a brand new high. AMAT, if you take a look at that. Also, this is another stock. The pattern that we're seeing on many of these stocks are kind of these U's and V patterns. And why do we point that out? Because if you look at the playlist of what we've talked about the last couple of weeks, we've really been talking about continuation patterns, moving average crossovers, spotting potential entry setups, like today, momentum, right? And so could that actually break higher? I got to bring this to a close here, but I want you to go out and practice looking for some stocks that are actually hitting some or having these 1, 2, 3 day pullbacks. This is a playlist from our recent classes where you could actually see what we've talked about, okay, as well. So check that out as well. Now, stay tuned for Michael Fairborn coming up next, talking about covered calls and cash secured puts. Also, remember to follow Connie and myself on X. We do post throughout the day, so check that out as well. Remember, with what we discussed, it was done for example, illustrative purposes only. All investing involves risk. And with that said, this has been the class on trading with technical indicators. Stay tuned for Michael Fairborn coming up next. And also remember, Connie Hill coming up on ETFs as well. Take care. Bye-bye.